Well, we've recently talked about Michigan football, we've talked about toxicology, and we've talked about President Trump and the process of impeachment and the definition of impeachment. But let's go back to some more of the fun stuff. Let's talk about money. Welcome back to my channel. My name is Dr. Anwar Youssef Dunbar, and this is Big Discussions. I wasn't going to make a video today, but I was reading on one of my coffee breaks and I learned some new stuff, and I thought it would be worthwhile to share it with my YouTube audience. And also, I'm realizing that as I am progressing in my financial journey and learning about investing, uh, recording these videos is valuable for me because it's documenting some of these things that I'm learning. So, if I talk about it and I record it and upload it, I will have a permanent record of some of these main points that I'm learning. I want to start this by saying that in making these videos about money and financial literacy, well, first of all, I know I'm going to lose some people because not everyone is interested in that from personal experience, but I'm not rendering financial advice. So I don't want anyone going back and saying, well, Anwar said to do this or Anwar said to do that. This is more, I'm approaching this more from a scholarly perspective, outlining some key terms and concepts, just in case you're trying to learn about this stuff as well. So that's the context for this. So the subject of this video is, cost basis and two keys to participating in IPOs. So that we're going to talk about those two things, and I'm going to try to get this done relatively quickly because it's late and I have a big meeting tomorrow, first thing in the morning. I'm going to start with a parable or an example from Robert Kiyosaki, the author of the Rich Dad Poor Dad series. And I recently, within the last year, I got a copy of this book from my godson. I think he's old enough to understand some of the concepts in here. Whether he reads the book or not, I don't know. But last night, when when my internet was giving me some problems, I just picked this book up and started flipping through it. And this is a must-read book, I think, for everybody. That's just my opinion. But in one of Robert's books, he talks about financial literacy like setting out to sea. You being the captain of your ship and setting out to sail on the ocean. And he basically said that before a captain takes his ship out to the ocean, he has to make sure everything is on the ship. So he has to make sure all the food rations are there, the life vests, the signal flares, everything. And so financial literacy and learning about money is the exact same way. You're slowly, well, depending upon which route you take, you want to continue to add tools to your tool belt. You want to make sure all the knowledge sets that you need and all the skills are on your boat as you cast off from shore and out into the ocean. And so, a quick story. I went out to Phoenix at the end of September to see my best friend, and my brother came out, and one of my best friend's buddies came down, and he stayed with us as well. And this gentleman was a day trader, and trading is different from investing. Maybe I'll make a video about that at some point. My mentor was very adamant about trading being different from investing. However, there are some overlapping concepts and there are some things that are related. So this gentleman was a day trader. He was up very early and he had his computer open and he was watching the markets, and for particular companies he was doing his technical analyses. So he was watching the moving average and looking at where the trend line was going hours ago, days ago, months ago, years ago, and he was showing me how to read the lines and how to predict where the lines are going, and when the lines have hit their ceiling and they go down and then they hit the bottom and they go back up. So we were talking about all this, and because I've been reading about this stuff and because I knew what a technical analysis was, I was able to have a conversation with this gentleman, I think to the point where it's kind of like two physicians talking or two auto mechanics talking. So we were using very esoteric terms, and the layperson, if who's not familiar with these terms, probably would have looked at us and would not have known what we were talking about. And I remember my brother saying, how did you know to ask him all that stuff? And the answer is I'd been reading about it over the last couple of years. I've read numerous books, and my mentor, or should I say, one of my mentors is a businessman, and he's trained in business, and so we talk about these things all the time. So I've been steadily adding to my tool belt, or loading my ship, whichever analogy you want to use. And so I was able to talk with this gentleman about his day trading, and I was able to understand some of the things that he was talking about. So it's about gradually adding to your repertoire, if that's what you want to do. So I'm always reading, and many of my coffee breaks at work are spent going to the closest Starbucks and either reading the business section of the Washington Post, or reading, right now I'm working on The Millionaire Mind by Dr. Thomas Stanley, and I'm working on The Intelligent Investor by Benjamin Graham. So most days during the week, if I have a chance to go to get coffee, I'm usually reading something financial. So again, I'm gradually adding to my tool belt, gradually adding to my knowledge set. Recently, I was with my mentor and his son, who's also well trained in business, and we were talking about things and talking about net worths, and I told them, I shared some of my numbers with them, and they were impressed with it, and the suggestion was made that I might start thinking about what stocks I might buy. To this day, I haven't bought any stock in any company, and that's something I want to try for myself, and it's something I look forward to actually doing one day. And so through this discussion, they were talking to each other, and the term cost basis came up, and so I heard them talking, and I was trying to follow along, and I said, you know what, no, I have to figure out what this means. I have to know what cost basis is. So I say, guys, what's a cost basis? And they said, oh, that's just the price that you paid for a stock. So that's the position you got in on. So it's an esoteric term, but it's a simple term once you know it. So I learned that recently through them. And so just as in science, when you go into other areas of life, asking questions and seeking out that information is very, very important, no matter how small or insignificant you might think it is, or even if you might sound stupid asking the question. That's an important skill to have. If you don't know, ask, and the person will usually be happy to tell you. So I was in Starbucks today, and I decided to read the Washington Post, at least during my first trip to the coffee shop. And I found a very interesting article in the Washington Post, the business section. I don't really read the front of the paper about Donald Trump and China and all those other things. This is the most exciting section of the paper to me. And so the article was entitled, "As Investors Bet on Money Losing Startups, 2019 Shapes Up as Year of Fad IPOs." So, and this was written by Thomas Heath, and I guess his column is called Value Added. And if I can find the online version of this, I'm going to leave it in the description box below for those who want to read it themselves. But just briefly, an IPO, and I'm saying this off the top of my head, is an acronym for an initial public offering. So many companies start off as private startups, and then once the company gets further along and they want to expand, that's when they take the company public, and they start allowing the public to start buying stock. So that is the initial public offering. It's when the company first goes public and can be bought and sold on the exchanges. And a very popular IPO, at least in my lifetime, was that of Facebook. And I'm going to leave in the description box below a blog post I wrote called "We Should Have Bought Facebook and Bitcoin Stock." So back around 2012, one of our buddies who was in the banking industry, he knew that Facebook was about to go through its IPO, and so it was either Thanksgiving or Christmas, was trying to get all of us to pool our money to buy this Facebook stock. I didn't really know much about stocks at that point. I didn't really know much about what an IPO was at that point, so I didn't. I think we as a group did not participate in that. I don't know if he did himself, but those who, well, you can read the blog post if you want, but those who got into Facebook early on were rewarded later on. So I'll just say that. So that's what an IPO is. So there are IPOs happening all the time, and there are new companies every year that are trying to make that jump to become publicly traded and to continue to grow and expand. And so this article talked about 3 companies, I think that, well, at least 2 of which most of us are familiar with: Uber, Lyft, and a company called WeWork. So you know that Uber and Lyft are the 2 transportation companies where they come and they pick you up, and I think they're called ride shares. They recently went through IPOs and are now publicly traded companies. WeWork is a company that I didn't even know existed until I went to go see someone in downtown DC earlier this year. And what WeWork is it's a business where it sells office space. So it's shared office space. So you don't have to go and buy a building. If you have a business, you could rent out a little piece of this big office space, and they have refreshments there for everyone. They have couches, they have little offices, they have study areas, and it was really, really cool to see. And that's WeWork. So there's been a lot of news lately about WeWork wanting to do their own IPO, but it turns out, and when I heard that, I said, okay, I know what WeWork is. That sounds like something that I might want to get into. But all the news I heard about WeWork was negative, and my mentor and his son, they weren't very high on it. And so it turns out in this article sums up why WeWork pulled its IPO and why it wasn't a good investment opportunity. And so the author of this article basically said that there are two things you want to look for if you're thinking about getting involved in an initial public offering. The first one, he said, is quote unquote, look for tsunami sales growth. So you want to, any company you want to buy, one of the things I learned is you want to look for growth. And so you want to make sure the company is growing or it has good prospects for growing. And the second point he said was look for profitability by year 3. So from that, I glean that a lot of companies don't make a lot of profit, their first 1 to 2 years of going public. But you want to gather all the data you can and understand and see if they're going to start to make profit by year 3. And beware of companies like Uber, Lyft, and WeWork because they're not showing signs of profitability. And the article particularly said that it's not clear how WeWork is going to make it's not going to make money going forward for its shareholders. So that reminded me of another piece of advice, which is not to invest in something you don't understand. So in anything you invest in, particularly if it's a publicly traded company, you want to understand what they do and how they're going to make their money so you can understand if they'll be able to make money going forward based upon current and future conditions in their sector. So that's pretty much what I wanted to say in this video. I wasn't going to make a video today, but I was kind of excited when I read this stuff because I actually, something clicked and I said, oh, I understand that now. And I understand what to look for now if I'm going to evaluate an IPO opportunity. Dave Ramsey, I've followed Financial Peace and I help teach that at the church I go to. He said that money is 20% head knowledge and then 80% behavior. So it's all about what you know, but more so than that, it's about your ability to actually go out and do it regularly. I would also recommend, if you're interested in money and financial literacy, to find a mentor. Robert Kiyosaki, in most of his books, he swears by getting mentors. Someone who's done it already. Someone who's knowledgeable. Someone who can stop you from making those rookie mistakes or who can easily guide you out of those rookie mistakes. So find mentors if you're interested in this stuff. And don't be afraid to go outside of your family circle. If you come from a family where there aren't a lot of investors or there aren't any investors, you may have to go and find that knowledge set somewhere else. And that happens a lot depending upon the family you come from. You might be lucky and you may have been born into a family who knows that stuff and you just learn it from mom and dad, but you might have to go outside the family to do that. You might have to make some new friends, which is something else Robert talks about as well. So you might have to go outside your family and you might have to make some new friends as well to get the information that you need. So with that, I'm going to stop this video here. Thank you for watching. If you have any comments or anything to add to what I said, please leave a comment in the comments section below. Please like the video, please share it, and please subscribe to my channel if you haven't. Thank you for watching, and always remember that your attitude determines your altitude. Take care, and I'll talk to you the next time. Bye-bye.